Article 52. Exceptions for designated zone. Under normal VAT rules in the UAE, designated zones are treated as being outside the state for VAT purposes when it comes to the supply of goods. This special treatment allows businesses within these zones to benefit from VAT exemptions under specific circumstances. However, this outside the state treatment is not absolute. There are exceptions where certain business activities within a designated zone are treated as if they occurred within the UAE mainland, inside the state, for VAT purposes. 1. Purpose of Article 52. Article 52 creates a legal basis for exceptions to the general rule outlined in Article 50, which gives designated zones their special VAT treatment. The executive regulation is authorized to define the circumstances and conditions under which these exceptions apply. When such exceptions apply, the supply of goods or services within a designated zone is treated as if it took place within the UAE mainland. This means the usual VAT rules for the domestic market would apply. 2. Role of the executive regulation. The executive regulation sets out key rules, including which activities in a designated zone are treated as within the state and when VAT exemptions may not apply. It also specifies the goods or services that may lose VAT benefits, and businesses must refer to it to understand these exceptions. 3. Rationale for exceptions. These exceptions exist to prevent abuse of the designated zone system. They ensure that designated zones are used correctly for international trade and not exploited to avoid VAT on transactions that are essentially domestic. If a business activity is deemed to have sufficient connection to the UAE mainland, the normal VAT rules apply, even if the transaction technically occurs within a designated zone. 4. Examples of situations where exceptions may apply. Although the specifics are set by the executive regulation, the following are examples of scenarios where designated zone transactions might be treated as domestic, within the state. When goods are consumed or used within the designated zone, rather than being re-exported or transferred to another designated zone. When a service is performed within a designated zone for a recipient located in the mainland. Issues arise when goods from a designated zone are sold to mainland customers without proper customs procedures, or when the zone is used for direct retail sales instead of an international trade hub. 5. Impact on businesses operating in designated zones. Businesses operating in designated zones must be aware that not all transactions within the zone automatically benefit from VAT exemption. Businesses must carefully review the executive regulation to determine whether their activities fall within any of the exception categories under Article 52. If such exceptions apply, they will be required to register for VAT, where applicable, charge VAT on supplies, and comply with all VAT return and reporting obligations. 6. Documentation and compliance obligations. To differentiate between exempt supplies and taxable supplies, businesses in designated zones must maintain accurate and detailed records. Documentation must clearly reflect the nature of the supply, its destination, the type of customer involved, and include relevant customs evidence for movement of goods. Such detailed records are essential to demonstrate compliance and will be critical in the event of a tax authority audit. For more details, contact us.